Our next panel is Changing Times with the BFSI. From insurance to mutual funds, what's new in the BFSI industry and how are they contributing to reviving Indian market? On the panel will be Ganesh Ram, the business head of the Bombay Stock Exchange, Ravi Kumar, the co-founder of Upstocks, Mukesh Kalra, the founder and CEO of ET Money, Vasant Jayapal, the senior vice president of CAMS, and Shanai Ghosh, the CEO and executive director of Edelweiss General Insurance Company. The panel will be moderated by Harsh Gupta, the VP, Enterprise Business and Strategic Partnerships at RazorPay. Guys, take it away.
Thanks, Karan. Thanks for the introduction. Welcome to FTX, everyone. Thanks for joining us today. We have a power-packed panel today. We have some of the veterans from the BFSI industry today. I'm going to start off with a disclaimer to the audience, right? Don't expect stock tips in this session. You know, what you can expect from this session is basically to understand how the overall BFSI industry is shaping up and what lies ahead for us, right? I'm going to start off with Shanai. You know, insurance industry traditionally has been driven by, agents and bank assurance as a channel, right? Unfortunately, in India, insurance as a sector has been under-penetrated. Hardly 3.5 to 4% penetration in the Indian context. However, in last 5 to 6 years, what we have seen is with the new digital channels coming up, the growth of adoption has increased. However, even after that, the overall adoption in the country remains pretty low, right? I want to understand from you, what does digital mean to you? And can it really further increase the adoption for the insurance? That's one. I'm going to pack one more question with that. I was reading one of your articles where you talked about Edelweiss has opened up its APIs for third-party developers, right? So how do you view all of that? It's one of the first ones, right? Over to you, Shanai.
Thanks, Harsh. It's great to be on this panel, and hello to all my panelists. Just look forward to having a great discussion. In India, and mostly in conversations, I find that, digital is used often interchangeably with direct to customer, and it's perceived mostly in the means of as a distribution or a channel or an acquisition route. But I think that to me is really underselling the power of digital. So for us and for me personally, I think digital is a way of doing business. It's a new platform for business, and its power to transform the entire value chain of BFSI, whether it's insurance or any other, is tremendous. Now, if you look at, digital adoption, I don't know by what metric we are evaluating digital adoption. If you look at, how many people have bought direct to customer, maybe that will look small, 5% or so. But if you look at how many people have been digitally influenced, that is tremendous. It's in excess of 60%. So I think that's just one part of the entire digital leverage that you have in BFSI. Now, if you look at what digital does, actually, it offers convenience and efficiency to each and every participant in the entire ecosystem. And these are great drivers for adoption. I was just reading some research by one of, I think it was Pricewaterhouse, which said that customers value today, especially convenience more than anything else, even above price. It was actually an eye-opener for me, and it was in the context of insurance. And it's not surprising, actually, that customers might pay a premium for even convenience. But beyond that, I think eventually what insurance, a digital platform does, it powers efficiency, which gives sort of room to the insurers to actually create more value for the customer, either through new benefits or better pricing or whatever. So I think that we've not even scratched the surface of digital in the country, but at the same time, its influence is far greater than what we imagine. And I think COVID has been a sort of tailwind for digital. We've seen it across industries, right? What's happened is, by force, people have adopted digital channels, digital way of doing business, of servicing, a lot more, and therefore a lot more people have experienced the power and convenience of digital, and therefore we are seeing that happening. To just give you an example, in my own company, we had the number of people adopting remote survey as a mechanism, and when I'm saying people, I mean customers, I mean garages, and garages are very difficult to influence and change their way of working, right? It's jumped 6x. And remote survey is a dominant way of our servicing our claims even today post lockdown. And we've launched multiple products, new concepts in this period, and it's been possible only because we've adopted video based collaboration techniques, podcasts to train people. And on day one, all the tools for selling are available to our distribution partners, whether you call them advisors or other digital partners, on day one, which is unthinkable in a previous era, right? And for us it's easier because we were a digital born company, so for us everything was digital. But even for companies which are transforming, I think the kind of operating leverage that they will see, and yes, transformation is a pain, but kind of operating leverage they will see is tremendous. And in India, we have, 700 million internet users, over half a billion smartphone users. Most of our internet usage is on the mobile. So I think our time has come. I really don't see any way out. And the next leap is the digital transformation of BFSI. It's already happening, but I think uh, we have to embrace it much more holistically. I'm a firm believer.
Great. Thanks, Shanai, for that. That's a great perspective. I'm gonna expand the discussion and move to other panelists. Right? So Warren Buffett, once said that he started investing at the age of 12 years, and then in one of his interviews, he said he literally regrets that he started pretty late. If I look at it from that context, in India, right? India is in fact a worse situation, right? I myself started investing in the markets at the age of 25, right? So from an Indian context, the penetration of, say, asset management industry is pretty low. Again, around 3.5%, 5% as well. So Ganesh, I want to move to you and understand from you, right? With this underpenetrated market, what role can digital and technology play in terms of driving adoption for the mutual fund industry?
I think I'm unable to hear you. Not sure whether others can able to hear you.
Can other panelists?
Can you hear me? You can put your hands up. I'm not able to hear you.
Oh, Mukesh, can you hear me?
Yeah.
Yeah, I think.
You can able to hear me?
Yeah, we can hear you.
Yes.
Seems like some technical glitch. Yeah, let me move that question to Vasant, right? Vasant, what do you think, in your view, what role can digital and technology play, right, in terms of driving adoption for the overall mutual fund industry?
Yeah, firstly, great to be part of this great panel, and hello to all of you. And it's a great pleasure to share the platform. It's a great event too. Compliments to RazorPay as well. Until a few years ago, if you asked me this question, I would have given a kind of a very different kind of an answer. The digital evolution, transformation, more so with the pandemic situation that we are experiencing today, it would be understatement to say that the digital transformation landscape has seen the seismic shift. We have made multiple levels of jumps, upliftments to various things on technology, to the platforms that we run today, and so on and so forth. Our own industry, mutual funds, and we are the largest RTA, as all of you are familiar with. 3 years ago, we were like 70% physical transaction that we do, be it onboarding, transaction processing. At best, we can call that as a digital kind of an environment to the max. Today, thanks to all the development, technology, and other pandemic-related events that took over, we are going more and more towards contactless and remote way of operating, doing transactions, and so on and so forth. We are seeing the excess of 70% transactions happening on digital platforms. And we have to remember the growth rates are absolutely muted when it comes to the physical locations where we used to serve our clients. We continue to do that. I mean, I can't say that it's fully digital today, and at least the NBFC sector and other sectors, the platform, the technology has taken a quantum leap, I would think, because if you talk about a digital lending platform, for that matter, they have made strides. I mean, at least 90-95%, you can say that everything can be processed. You can do an onboarding, you can do your credit checks, and you can connect to various ecosystems, everything else, and give a great experience to the borrower or I mean, my own personal experience. And I went on to buy my own insurance. It happened like 2 minutes online, and I didn't even have to think twice because I knew that I was interacting with a bot, almost close to having to deal with a human being. So that's the level of changes that have happened, and we are excited. I mean, at CAMS, many of our interfacing, our customer interfaces, the ecosystem, the broker ecosystem, to the way we deal with all the stakeholders, the constituents, most of the things have converted, transformed to the digital one. And we run our own digital platforms trying to manage the entire life cycle and make the investor experience superior. Yeah, so great time to be in.
Yeah, great time to be in. Coming back to Ganesh. Ganesh, I hope you can hear us, right?
Yeah, now I can hear you. Sorry, there was some technical.
No worries. Okay. So there is a an ongoing debate about how can we move from a metro to Bharat, right? So my question to you is, what is it that can drive adoption, the mass scale adoption for the financial services industry, right? How can we take, right now, most of your users are only limited to metro cities, right? How can we take it to the tier 1, tier 2, tier 3 cities? How can we move it to the Bharat?
See, I'll tell you, when we talk about digital, at least it's my personal view, right? So if you look at the mutual fund transaction per se, like Vasan told, there is a client onboarding, then there is a transaction, then you have a payment, and you have a client services, then you have a fulfillment. Okay. In our sector, I think India has moved much ahead in the digital way, right? But if you look at the adoption, if you draw a line between this, so there is a huge market level, things we'll have, because with KYC we just got the policymakers just allowed eKYC probably 6 months before, probably this year. Before that, it was more or less a completely paperwork, right? In payments, transaction, I think a lot of apps came in, at least some hundreds of apps got mushroomed the last 2 years. Okay, people like what Shanai spoke, the convenience. So I've been told by a lot of people, was I traveling in a bus, I'm just traveling in a car, I do a SIP. Much easier, so it's convenient. But where you guys made a huge difference is the payment side. Okay, payment side has gone through a huge, like what CAMS has done or what you've done. So I think, but the client fulfillment and services is always there. You can opt for e-cash and all. So digitally, if you look at, if you actually look at this way, it's already there. But what really made a huge difference is the reach of the network across B30 locations. People have mobiles, as I spoke about. People had a connectivity. But what really makes, what we need to do to reach to the B30 location is not only digital, right? But also, like, if you look at Amphi Vision 2025, they said, now how we can use the banking channel as one of the huge distribution. Okay, that's a huge potential in India. And unfortunately, you have regulatory coming up, and I can't talk more about regulation because bank has a different regulation, markets has. But I think somewhere that's going to be a huge potential area because, like take any bank. So their customer base is so huge and they have a huge B30 or even beyond B30, B230 locations, right? So that's going to be one huge opportunity, how we can kind of leverage. And the second is using the digital wallets. I know there is some, so I'm talking about all these under the third party or compliance point of view, right? So we can able to kind of draw a framework, how the digital and payment wallets can also be used to make payments, right? And how e-commerce guys can, some of the major e-commerce guys, how they can also able to help to push those. I'm talking about a minimum of 100 rupees or 50 rupees, but still, mutual fund, the capital market is a wealth creation over a period of time. It's a habit. You can't just experience. I have a lot of youngsters coming up and say, "Sir, I want to buy an iPhone 12, right? So in the 6 months I want to do. Can I start a SIP?" Say, boss, it doesn't work that way, right? So the awareness is also very keen. I think mutual fund had two problems. One is the risk, which the tagline talks about, market risk, and the second is the awareness. People thought that my principal amount also will go up, or there was other kind of millennial guys who 30% of the volume today comes from millennial guys. They believe that within 6 months, a year, I'm going to make a wealth. So I think the awareness is going to be there. Digital is today, there's a lot of apps, a lot of data available for people to take a decision. But that's really not the digital. I think no, once people are aware how to use this and how to kind of make wealth or create wealth, I think the 30 lakh crore AUM will definitely reach 100 trillion, right? As a target for 2025, but at least by 2030, I think we can definitely make it. That's where I think the shift need to happen. So these are the few things I think we can make a huge difference.
Pretty interesting, Ganesh. I think the point that you touched upon around financial literacy in the country, right? It's pretty low right now. And I want to move to Ravi and talk about Upstocks is again one of the leading discount broking platforms in the country, right? And we all know that discount broking has taken the entire broking industry by storm, right? By reducing costs significantly for the customers, right? And driven adoption, of course, at the same time. I want to understand, Ravi, from you, what's next, right? Cost is one, right? That's just one step, right? What would really lead to adoption or drive adoption further, right? What do you think? Is it going to be a product innovation? Is it going to be convenience? Is it going to be discoverability? Or is it going to be financial literacy, like Ganesh talked about?
Yeah, great question. First of all, thank you for having me on this panel. And hello to all the panelists here as well. So look, we're a lot of our growth actually has been coming from tier 2, tier 3 towns. So we're opening 200 to 300,000 accounts per month, demat accounts per month currently, and 75% of them are coming from tier 2, tier 3 towns. Most of new customers are first-time demat account holders. They're choosing our platform as like their first kind of entry point to getting into the direct equity investing side of things. So it's obviously very exciting, and a lot of this growth has happened over the past 2 years on the top of things like Aadhaar-based onboarding and internet penetration, same things that everyone else on this panel was saying. I think going forward, for us at least, the brokerage platform, it's introducing more products, more exciting products that people want to be using, and making that whole thing as digitally enabled as possible and easy to use, easy to learn, and easy to invest. And then eventually, I think the kind of gravy on top is going to be how do you link all these different products together and offer a very customized user experience for the end user. Things like AI, ML, and a lot of analytics, will obviously be very powerful for doing things like that. But generally speaking, just doing more of the same has also been very helpful for us in making onboarding easier and easier, making payments more and more stable, right? Things like that go a very, very long way, and every incremental 1% change that we make, leads to like multifold returns for us. So that's something that we constantly innovate in, and frankly, having partners like RazorPay has been fantastic in getting us there.
Great, thanks, Avi. So coming to the product innovation piece, right? We have seen in recent times robo-advisors have started propping up in the Indian context, right? And Mukesh, I want to move to you and understand what is the future of robo-advisors in investment and wealth management in the Indian context, right? What's the future? Do you see a real adoption of robo-advisors? Do you see, because right now customers are not ready to pay for advice, right? What they want is with these discount broking platforms, they do not want to pay anything for investing, right? With robo-advisors coming into play, do you think there's going to be a further adoption of this, and what's the future?
Yep. Firstly, thanks for inviting me, and it's a very good panel. To your question, Harsh, is that firstly, I think robo-advisory is one word, but essentially the way to look at that is personalization, right? It's at the end of the day, can technology lead to personalization? And what we believe is that the future is like super, super exciting. And if I call out the reasons for that, right, there are 3 or 4 big structural changes that are happening, right? As in a savings account or financial deposits or in the country today, if I throw some stats, as of March 2020, right, 60% of India's household savings, right, in terms of financial assets, is lying either in savings accounts or bank deposits, and that is close to like a $700 billion of money lying there. Right? So there's already too much money that is lying idle. The other aspects of how does it find efficient ways to grow? Other than capital markets, the other options have been always about deposits or real estate, gold, and all these have actually gone out of flavor, right? So essentially, we are seeing a huge amount of money lying idle, and so that is one part of the structural shift that is happening. And COVID has actually increased the savings rate more, right? Because people are actually having more money, more disposable, less spends. The other thing is that consumers have got much more smarter, right? At least on ET Money, we are seeing that. Like when the markets are going down, we are seeing people actually investing more. When the markets are going up, people are actually kind of holding, and it's very, very myth breaking kind of behavior, which actually clearly says that people and consumers are getting way too smarter, right? The third, I think, the big unlock that is going to happen in the future, which today we don't see it as clearly, is that there's this, I call it like between the consumer and the service provider, there is misalignment of incentives, right? So either there are commission-led players or there are transaction-led players. Now the commission-led players, consumers think that, what is it that the agent is going to come and sell me, which will earn him more commissions than actually really thinking about what is the product that is being sold to him. And there have been instances where people have got a bad experience. So there is this misalignment of incentives actually creates a very high amount of trust deficit, right? So there are smarter consumers with high trust deficit. The transaction ecosystems are actually driving towards more, it really doesn't matter to the transaction ecosystem whether you're doing a profitable trade or a negative trade, right? It's just about ensuring that the transactions happen, right? And to actually solve for this misalignment, there is a regulatory unlock, right? So SEBI has come in and said that either you make money off advisory or you make money off commissions or transactions, right? Now that actually suddenly opens a wide space for advisory kind of business or models to actually come into the play. And that we believe is the most aligned model, because it actually really aligns to consumer interest, right? And if I combine it with the whole thing of the access to consumers, right? Ganesh was talking about it, Shanai was talking about it, everybody is talking about it in the sense that the way we look at it, it is not really 20 million, mutual fund investors in the country or capital market users, but there are like close to 60 to 70 to probably 80 million users who are doing, parking their money in deposits in FDs, right? That's one way of looking at expanding the market. How do we actually move them into say slightly higher risk products, right? And that's where the advice will play a role. Now, if I go further down and say that how many savings accounts are there, and there's a savings account to the tune of 300 million users, right? So suddenly the access to consumer is like massively exploded, right? And if I look at these 4 or 5 structural shifts, then it's clearly visible that the future is very, very bullish, and it's a huge white space in the advisory ecosystem that is there, right? So too much money, consumers getting smarter, misaligned incentives, regulatory unlock, and a huge access to consumer base, right? So that's the huge positive for the industry.
Sure. My next question is to Ravi and Mukesh, both of you, right? With your kind of platform coming into the market, right? ET Money and Upsource, right? What's the future of full service broking houses? How do you see them, with you guys putting up a strong competition to them? How do you see, full service broking houses shaping up?
So maybe I'll start with that one.
Yeah.
I think it's going to be space for all types of players, all shapes and sizes. There'll always be people, especially probably the wealthier people, that want to be able to walk into a branch or know their relationship advisor personally and to get advice from them. So I think India is such a vast country with so much potential that I think there's going to be all different types of players that will be able to thrive. So of course, some of that can also be digitized, right? But I think full service itself will have to change. But there's always going to be a need for full service.
Mukesh, what's your view on that?
I think as a combination. See, today what is happening is your advisory and transactions are bundled, right? You don't really have a sense of what is advice, what is good, what is bad in that sense. Now there is a clear segregation. The full service will get more and more towards ensuring that transactions happen. Uh, you know, uh, so I think it's a very tricky situation for full service brokers, because on one end, players are moving towards providing, so to say, a very personalized, highly recommended, putting your money on autopilot kind of platforms, which are extremely low cost, right? Which are actually very mass affluent oriented, right? And on the other side, there are already established discount brokers who have actually kind of gained super momentum, whether it is Ravi's Upstocks or Zerodha.com. So it's in a fix, but market is huge, and they will have to realign themselves to a very different business model, which is super low cost. There is no escaping that, I think.
Great. That's a valid point. Coming back to Shanai, what we have seen in the last 2-3 years is some sort of a transformation, right? In the sense that a lot of the new e-commerce players like Flipkarts of the world, Amazons of the world, even players like Ola, Swiggy, and all, selling insurance on their own platforms, right? So how do you see that? Do you see that as a competition? Do you see that as a more of a distribution channel for yourselves? How do you see that overall ecosystem evolving with more players coming into it and cross-selling?
That's a very good question, Harsh. I think, yes, exactly. That's what I see it as, the evolution of the ecosystem, which has a lot of traditional and non-traditional participants. In fact, you had made a point about, us being the first insurer to open its stack, API stack to third-party developers. This was the exact purpose behind it, because we see, I don't think anyone can afford to do everything, and there are different people solving for different parts of the entire value chain and the entire puzzle. And to create a truly engaging, seamless experience for customers and to own the customer, you need to partner with a lot of players. And as of now, platforms that own customers like a Flipkart or Amazon give that access to consumers, and they are acting as a distribution platform. But I think the true power of these kind of platforms is if we as an insurer were able to, work together, collaborate, use our technical knowledge and analytics and their data to personalize products and experiences for their customers, to create truly what I call personalized products and really one-click experiences. Because I genuinely think that our the competition within the is boundaryless now. So when we in our own company, when we talk about experience, gold standards are not necessarily from insurance or even from BFSI or even from the country. They are across the industry. The customer is not comparing our experience in terms of convenience to what another insurer, how fast you sell or how fast you claim. It's about general overall experience, because you've got Amazon, you've got Flipkart, and you've got RazorPay platforms. So, the way I think one thing truly has transformed the way payments has been transformed in India with the India stack and all. I think there's tremendous potential for insurance also to transform. The competition or collaboration is not just within the industry, but across industries, across globes. A lot of we are trying to create usage-based products for customers, and we find a lot of our partners are coming internationally, and they're not necessarily, they're technology providers in some cases, they are IP providers in other cases. So for us, I think the way we see it is create evolution of the ecosystem with a lot more participants coming into it, and us having a platform like an open API gateway where I can create an insurance as a service platform and integrate with multiple participants very easily.
Great. Yeah, I agree. So I think the next question is, for Vasant and Ganesh, right? As we see with payments and digital scaling up, right? One of the biggest challenges is fraud control, right? How do we manage fraud, right? Do you think the new age artificial intelligence or bots is something that can help in controlling fraud, or what is it that the platforms can deploy to really manage fraud? Because with the digital scaling up, fraud is going to be one of the biggest challenges. Yeah, Vasant, you want to go first? Yeah, go ahead. I think you are on mute.
Yeah. Hello? Yeah. So, like I mentioned, we have seen, especially during the pandemic and outcome after the effects of what we have seen, the digital number of channels, what Ganesh mentioned, there are hundreds of them today, right? The velocity of the transactions that are hitting our systems, right? Let me talk about the payments for the moment. There are lots of new way of doing transactions, okay, are very unheard of. I mean, let me, for example, talking about mutual funds or capital markets related transactions, we didn't talk about more than one or two types of three types of transactions to look at. Today, we can potentially talk about anything, and like any other payment methods that can be used for any other industry, things are evolving pretty thick and fast, right? So while we are facing this challenge of all the transactions and everything else coming through various different channels, we are not honestly geared up to manage the fraud and everything else coming through a true blood, omni-channel, right? Uh, Most of us are getting caught unawares in terms of how we can protect the customer data, the investor data, the personal, identifiable information. If you notice, I think the fraud when it comes to fraud, it's mostly run by insiders in many of the cases. 70% is what the industry number talks about. Uh, while all this happening, we have the ability now to see through. I would rather argue that a technology which offers the form of the AI, combination ML, and the bot as the technology, it's not just about a tool which helps you to serve your customers and clients. Okay, it has gone much beyond that today. Okay, so the typical use case is to say, okay, how do I serve my client? How do I serve my investor? How do I serve my borrower? Okay, that's the biggest use case we're all familiar with today. I would argue uh, our data, the personal data, especially individual data, investor data, is far more in safe hands when you use AI, when you deploy or employ AI as a platform and technology to interface. The reason why I would say this is, uh, let's talk about even a use case of, like I said, identity theft is one of the, the strongest things happen. People try to enforce the others. So you can get to the first level of case. Okay, you can use some of the credentials like a PAN, Aadhaar, whatever. You can use all of them and cross some level, and then comes the challenge. Right, when you are on a platform and the AI, that's it with the power of voice and the face ID and everything else. Today, pretty much voice print as an example, right? You can match the voice based on the historical voice prints that you have of a investor, as I run a check against that, and you can call out, and it's very easy to tag. It happens in milliseconds today. Okay, these are technologies not available in the developed world or whatever. We are seeing it right now. All remains to be seen is how we are going to adapt this technology, how we are going to be useful in terms of implementing the. Remember, like I said, we have multi-channel way of doing this. We still don't have a true level, one view of the customer. However, with AI being in place and with a lot of data and everything else, we can connect all this dots. Okay, in a fraction of a second, you can run against multiple millions of records of customers. Thereby, you're able to do this. Again, a quick example is voice check. Let's say that somebody is logging in. Those days, we do all rules-based kind of identifying frauds and tagging frauds and non-frauds. Today, let's say a challenge can be given posed to the investor, for example, to say, tell me the location. Okay, and in your bot, let's say the chat bot platform, the AI engine which runs can within seconds identify, check the IP address and see where this caller is calling from. This is mapped against the correct user, right? So here you can get eventually flagged off, and you have an option to either put through a transaction or hold the transaction. Okay, 2 or 3 challenging questions can solve. I'm talking about very easy use cases. This can get complicated. Okay, yeah, brilliant example that I can talk about is Bank of America today. I mean, we used to have all this virtual assistants, now converting into bot channels to using a lot of AI, ML, and they have like something like Erica as a platform can identify more than 20,000 kind of use cases, questions, all that can recognize upfront. Okay, so at any point of time, if based on the history of data available, if the client is or an investor asking a question, anything about this thing, on the fly they can create a score. They can pivot the transaction to the credit check agencies and try and see whether their behavior has changed. Today is not just about a rules-based mechanism which is in play. It's also based on the behavior. There are a lot of quantum jumps that we have seen in terms of behavioral-based kind of analytics in play. Okay, so I would argue the combination of all of this. I mean, India is also taking that kind of a leap in terms of when the government has enabled many of these things. I mean, you name Face ID to video KYC and all this. With the combination of the power of the engine that you have both. You're able to have static data based one as well as dynamically able to identify all these frauds and threats. So again, just to summarize, I would argue that your data, personal data of investors, borrowers, and everything else more safer in the hands of the thing. Remember, like I said, most of it, 75% of the fraudulent transactions happening in this country and elsewhere, it's all insider fraud. So we can completely eliminate. I believe that over time, if not 100% today, the AI bot can fully replace and negate the need of having the human interface at all. Okay, so we at CAMS again. We are honestly in the beginning stages of implementing some of these things. We are seeing great results. Okay, and end of the day, this not only delivers cost efficiency and operational efficiency. That's more critical during this kind of pandemic times. We scramble to take care of all those efficiency issues as well as the savings in terms of identifying the frauds upfront. That is taking us a long way. I think we are all geared up to embrace it in a big level.
Great. Thanks, Vasant. That's a good perspective. Ganesh, I want to give you a minute to really share your views on this.
No, I'm glad. I expect Vasant to take more time because he has all the data. Okay. Have today. He is expected to have. But I'll tell you, very interesting. My view is quite different. I was actually thinking. In fact, I was telling Ashish, who is our MD, the other day, saying that the number of people who have come into mutual fund industry in recent days has tripled after everyone has seen the Scam 1992 web series. Okay, so people thought that fraud is more attractive. Okay, so I'm not supporting fraud here, but I'm telling you what industry is not able to bring people. So people thought there is something else. Okay, just on a lighter side, but it's a fact. Okay, there's the numbers which you're talking about. But on the other hand, I kind of agree with Vasant. I think fraud you look at mostly happens when your client onboarding, which happens, and a payment happens. Some data production, data privacy, and all. It's completely separate technology-based thing. But I'm talking about from process. I think process is much more to be streamlined. If technology can able to help to streamline the process where we can put control. So we're talking about onboarding. Today, thanks to the government or regulator, I think every bank account is linked with your PAN. And I think most of the bank accounts is linked with the Aadhaar. And your eKYC also talks about Aadhaar-based authentication. Okay, so a client onboarding, that is very minimal chance you're going to onboard someone which is fraud. Okay, that's my view. And second, I think in every platform today, when you put the PAN number, there is an income tax API check which happens. And you put a bank account, I think RazorPay itself enables it. You can enable the bank validation, okay, to check whether the bank account number valid. A lot of controls have been put in the industry thanks to technology. But I'm not saying it will not happen, but if it's going to happen, it's going to definitely, there'll be people behind it and the process gaps, which is going to enable. Beyond that, I think technology has kind of enabled, controlled or filtered about 95% of the financial fraud which can happen. But beyond that, yes, definitely where there is a chance, I'll tell you one example. I was talking to one of the bank seminar. So one of the investors asked me, sir, I don't believe mutual funds or capital market. I invest only in bank deposit. Whatever you talk, okay, whatever you lure me with so much of 12% CAGR or 16%, but I will never invest. I'm okay with 2%. Okay, so I told him, okay, sir, you can do that, but one thing I would recommend is once you put a deposit, you can go to a bank manager every week and say, is my money safe? Yeah. Okay, that you can do. So the reason why I'm telling is mutual fund. I think Mukesh or everyone in this panel will agree. It's the most regulated product today. Okay, you can get your NAV on a daily basis. You can get your ECAS on a daily basis. It's all up to how you're going to manage it. I think that's also the investor awareness on my portfolio, my data. Also very important because we still have so much folios where the nominees are not there. We don't have the proper email IDs which is registered. I think it's also an investor awareness. I think regulators is trying to push it more. These things can really fix the frauds, but beyond, I think technology has done its bit. It's my view.
Thanks, Ganesh. Ravi, before I move to you, I have a quick question from Mukesh, right? Mukesh, we were talking backstage about cattle tech, right? Do you think, we have enough technology in our hands to identify that black sheep in the flock?
Yeah, I think Shanai would be the best person to actually talk about cattle tech because it was from our previous last year moderated panel. It was a lot of fun there as well. But from a technology point of view, right? The way we at least look at it is that can we actually put your savings right on complete autopilot? That's what technology should efficiently do, right? And when I say autopilot, why should I be worried about where to put my money? Every time I'm just looking at every SIP, can it be automatically allocated into the right set of assets and all that, right? And today the data and the technology actually enables you to do that at scale, right? So the larger future technological advantage is to really put your savings account or savings money on complete autopilot, which also removes the whole misalignment of that I talked about, that and it's completely transparent where the money is going, how much is getting invested there, and it gets rebalanced, automatically managed if the market is going up. It removes money from equity to debt. If the market is going down, it automatically moves from debt to equity, and so on and so forth, right? I think all of this is now supremely possible, and we have been iterating on certain aspects of it. We have found really, really amazing technology to actually enable it as well. So I think there is a lot of unlock that can happen. And what it also does is it really brings in the kind of efficiency, right? So I was talking about $700 billion. Imagine that, if a part of that, even 5% of that is on autopilot and it's automatically efficiently allocated, right? Then we're talking about really adding like 1% to GDP's growth of India. Like it's that kind of impact is possible. It's not even like, so it was probably a few years ago, we were asking whether this is going to be happening or not. Our sense is future is already here somewhere, in Bangalore or Gurgaon or Bombay. Somebody will take a shot at it, and it can really be the next phase of evolution on how money moves.
Thanks, Mukesh, for that. I think we have limited time now. I'm going to move to Ravi, and we are going to summarize things, right? So, Ravi, I want to ask from you, if you were to tell me one thing, right, that is going to disrupt the overall, asset management industry or the stockbroking industry in next 5 to 10 years, what would that be?
A very, very heavy dose of personalization. So using machine learning, all these things that everyone's talking about here. So that's going to be the most powerful thing to really, really enable, and as Mukesh likes to say, unlock, a lot of value. So that's what I would say.
Okay, thanks. Shanai, over to you. What would be one thing that can, shape up the insurance sector, insurtech? What does it mean to you?
So I think I'm going to, personally, I feel that AI and ML is going to transform the insurance landscape. And I think the power for it to transform customers' experience and everyone's experience and uh, give efficiencies even to insurers is tremendous. In fact, I just want to make a point. All this discussion about fraud, etc., that we were having. I just want to give an example. It's an anecdote, but it's a well-known case study. Now must have heard of this insurtech called Lemonade, right? They actually serviced a $500 jacket claim that a customer lost in a bar in 30 seconds, thanks to the AI and ML engines running in the background. And they famously have gone on, gone public saying 18 anti-fraud algorithms run in the background to give you a confidence score that says, okay, go ahead and pay. And you get customers to describe their claim on video. So there is technology to read the possibility of the customer telling the truth versus lying. And all of that is possible. So, AI and ML is my bet as the next big thing that will transform the industry.
Great. First, so it's personalization, AI, ML. Ganesh, what's your take on that?
I think everyone has covered it. So I will kind of have a hybrid of whatever Ravi said or Shanai said. I think it's all going to put together, but I think as Mukesh also told, I think the biggest challenge, at least for us, at least in this forum between me and Mukesh, what we share is how we kind of going to unlock. There's a huge potential. So for example, we have 75 active bank accounts, 75 crores active bank account, out of which I have only 1 crore or 1.75 to a unique. So how I'm going to make that shift, right? So that's going to be the most, and if technology is going to help, including investor onboarding. If I'm going to have someone in the very remote place, how this AI technology is going to help me to onboard right quickly, and how I can able to retain, how this face time between the advisor and investor is going to be, where there is a, because now I think what industry or anyone not able to achieve pandemic has achieved is push of digital, right? So now there is another option for people. So how this is going to help for advisory, like we spoke about robot advisory. I think these few things is going to be a huge opportunity. And then technology, I'm not a technology guy, but say, it could be AI or whatever you talk, robotics. I think that's going to be a huge potential, and we can only able to see the benefit if we're going to unlock and move towards that at least 10 crore.
Thank you so much, Ganesh. Mukesh, Vasant, we have limited time, so I can only give you one line each. So what would that be?
Well, I think it's all coming together nicely. I think we all summarized the thing. So beyond whatever I have said so far, while definitely there is no going back on all of this, I think we have to move forward with embracing all those technologies and everything else. As we talked about, fraudulent transactions happening, the fraudsters are going to be more awake, and they are using a lot of data and deep diving into data, using the same tools that you have access to are much faster, much better. Okay, you've got to keep that in mind. So my take is that adaptive analytics is going to be key to make sure. I think Ganesh mentioned that we are custodian, we are responsible for protecting data in millions of investors. And I wish definitely what he said, 100 million and the trillion is what the number that we are all looking at. There is definitely headroom. We are deeply underpenetrated. As much as digital can help us to scale, we have this thing. So I would vote for better analytics, deeper way of looking at the data. There are a lot of things that you can unlock, and there is definitely a government unlock which will get involved in terms of regulators coming together. And most importantly, with all this we are talking about today, the overall ecosystem has to come together. Okay, that is very, very important and critical. Even though data is sensitive, there is a way for us to share the right level of information to make sure we surge ahead with the digital path rather than get controlled by the other things like fraudulent activity and so on and so forth. So I'm all for the digital way ahead. Yeah.
Thanks, Vasant. Mukesh, strictly one line. Sorry,
one line. Let's figure out a way to put India's savings on autopilot using technology.
Great. Thank you so much. I would like to thank all of you for joining us today. Thank you so much for taking out time. It was a very, very interesting discussion. Thanks, everyone.
Thanks so much.
Okay. Great to be here.
Part of this. Thanks.